Hello again, this is Alex with MasterChartsTrading.com, and this is market recap for Friday, February 16, 2018. Today we'll look at some of the intraday charts, for example, a 4-hour chart of S&P 500. Major indices are probably gonna pull back a little bit. The oversold bounce seems to be coming to an end, but QQQ and AAPL are within striking distance from fresh highs. Interest rate sensitive funds are still being sold. We'll look at treasuries, maybe we can short treasuries. Then we'll look at forex. And this is there's some really troubling developments in the GDX, and we'll look at it a little bit more carefully. Gold miners. Again, we'll look at oil, natural gas, and we'll finish off with a crypto review. So let's look at S&P 500 futures. This is ES1 exclamation point on TradingView. Bullish chart. These are fresh all-time highs. Now we're having a normal pullback. Notice this hammer-like candlesticks. For example, one here on the 6th of February, another one here on the 9th of February. Myself, I mean, all stocks are pretty, they have high correlation, so a little bit busy here, but I wanted to show my recent positions, what happened to them. So, first of all, initially, and this is Dow Jones Industrial Average, DIA, the ETF that tracks the Dow Jones. The correlations between Dow Jones and S&P 500 are basically 100%, so this will be a good example. Back here on the 22nd of August of last year, I went ahead and I opened Dow Jones at about 218. Had an exit here on the 22nd of September, and then finally closed the position recently at on the 5th of February of this year. So so far with me, so far so good. Then an alert was sent to my subscribers, and I myself actually entered also at 243.49 on the 9th of February of this year. The position went in my favor, thankfully, and I actually had a pretty heavy position. Like I took a double, almost 2.5 times the normal size of what I normally open, but I felt like this was a great opportunity, and I was rewarded for taking this risk. I went ahead and I sold half here on the 14th, and the position is still in my favor, and I also moved my stop to above entry. So this is a 100% profitable position, even if Dow Jones collapses Monday, which I seriously doubt. So let's look at S&P 500, but a slightly zoomed in chart. We'll look at 4-hour chart, but same thing basically. Here is a 4-hour chart. In other words, each one of those candlesticks is worth 4 hours worth of activity for S&P 500 futures. So you can see, first of all, the fall back here in the beginning of February. Big red candlesticks, bottom in action, rebound. Here on the 4-hour chart, notice that basically a good place to short, if you are if you know what you're doing, would be at the red line. So I would be shorting at the red line, basically around 2660 for a hope to move down. So this trade, for example, here, if I was to take this trade on the 8th of February, and sell here where I'm hovering right now, then this would have been a profitable trade. Now currently we're on a 4-hour chart. Again, this is a zoomed in intraday chart. Notice that we're attempting to break out above this blue line, which is currently at 2747.50. A breakout above this blue line, I'm fairly certain that it will almost guarantee fresh all-time highs. Opposite is also true, and you can see a clear resistance. I'm zooming in right now, and here's that clear resistance. Notice that we have one, two times, two touches of this blue line here. These are indicators that are calculated by my script. You can find out about the script at MasterChartsTrading.com. So what am I trying to say here? Basically, you know, an instrument is following kind of like a predetermined script, and so far I see. I mean, if I was really trading S&P 500 futures right now on 4-hour chart, I would consider shorting it right now. But an opposite is also true, and if we see especially if we see a close above 2747.50, above this blue line, we could see a significantly move higher from here. So for example, here's QQQ. Again, fresh highs are quite close. And this is another alert I sent on the 6th of February, and it actually also is a complete trade in the sense of it went to the target. The target is pretty tight. I only have a target of one average true range. Recent trade Apple. So here's an alert that was sent for Apple. Alert was sent at 160.52 on the 6th of February of this year, and looks like we got a 9% gain basically from this trade. So if you opened this trade, good for you. All right, let's see what else I need to cover. Many funds are in the middle of the bounce. So for example is IWM. Also alert was sent, and this is already a profitable trade. S&P 500 SPY also, basically in the middle of an oversold bounce. As I said, for futures, it will translate into price action on Monday. Futures start trading on Sunday. This line in the sand with 2747.50 will be important, and it could be either way. We could see resistance here, or we can see a breakout and fresh highs. Okay, let's move on to interest rate sensitive funds. Here's XLU on a daily time frame. So I mentioned that if you're an aggressive trader and for some reason you wanted to short utilities, you could have done so at the yellow line, which is currently 49 bucks. But you have to realize that my stop would be a close above this blue line, which is currently at 53.53. In other words, it's a trend change, but this trend change has not occurred. And for this particular security, XLU, if I was trading it currently, and I'm not, I'm avoiding it currently, and hopefully my subscribers are also avoiding it. But if I was trading, I would short it at 51.07 with a stop above 53.53 currently. Here's IYR, another interest rate sensitive fund. Notice the downward facing arrows. For example, here is one on the 24th of January, beautiful move down. Another nice opportunity is to basically short at the red line, and it worked out beautifully again. So we got two opportunities here. Again, we're coming up to this red line, so IYR could potentially be shorted at 75.75, and you can do it via inverse ETF called DRV. So if I was trading it, I would probably buy it at 13.40 or so. Don't forget there's slippage for triple leveraged inverse ETFs, so be careful with them. There's where I would put my stop. All right, So we got real estate and utilities breaking down. The reason being is because of TLT and bonds in general. So here's TLT on a daily time frame. Notice we're trading below this yellow line or around this yellow line, but we had, most importantly, we had a close below this yellow line. So again, now we're looking for either a rebound or basically a rebound on which to short. I don't think TLT is now in a bull market. I think it's in a bear market. So if I was shorting it, I would wait for a bounce to 121.39, and then we could do I think TBT, which is an inverse ETF. So it's another opportunity. But again, this thing has slippage, so be careful. And that's my position. I had to close it at a loss. So overall, bonds, especially treasuries, are under pressure. So this is putting pressure on the interest rate sensitive funds. Like I said, the XLU showed XLU, also potential shorting zone, and IYR. Okay, so let me see what else I needed to cover here. Okay. All right, so let's also briefly look at junk bonds. Here's junk bonds. Junk bonds were able to clear this red line. To me, this is still in a bear market because we had a close below this yellow line, so I would basically avoid it. If you're really interested, you could potentially short it, but I would put my stop like above here, above the blue line. But if we get a breakout above the 36.67, then we're back in the bull market again. So there's quite a bit of whipsaws of late. Right, and now let's continue to the Forex universe. This is DXY, US dollar currency index on a daily time frame. So I still think that the dollar is in a bear market. Notice there's downward facing arrows. Those are basically the good places to short, and you could use them. You could find this good areas to short using my indicators that you see on this page, the 4 colored lines that are available. So what are we seeing here as far as price action? I think this is a bottoming pattern. I think this looks like a bullish engulfing, possibly. So I think a bounce to 90.60 is very reasonable. A bounce to 93.50 is quite reasonable as well. Euro versus US dollar, we're at fresh highs, but it looks like we're now wanting to pull back. Recent alerts brought in as much as, for example, this one brought in as much as 789 pips from recent alerts. So it looks pretty good. But I think, once again, I think the pullback is reasonable to 122.11 or possibly even deeper pullback. GBP versus USD, notice this pullback already occurred, and I think there's going to be more where that came from. US dollar versus Japanese yen, possibly the hammer candlestick, possible bottom in action. A bounce to 10, well, at least 107.2, but more likely 109, like 109. 289, 283 could not be ruled out. So as far as trend change for the dollar, I don't see it yet, but anything is possible. Let's look at Canadian dollar briefly. US dollar versus Canadian dollar. Recent alerts were quite successful. Still bearish. This pair is still bearish, and you know, it's possible we're bottoming here, so let's not make too rush over decisions. So again, overall, I think the dollar is ready to rally from here, but where will it rally to? Good places to look for resistance would be 90.60 or 93.50. To gold. Now, gold enjoyed a really nice run because of the weakness in the dollar. So notice that gold is at fresh highs here. There's a gold futures in a daily time frame. So again, you know, we're using basically my indicators here, and recent alerts were quite successful. So here's recent one, about 9% gain. Still looks bullish, but once again, I think if the dollar decides to rally, gold will get sold. Okay, and here's GDX on a daily time frame. I'm gonna zoom into some price action of late. It's really cool, I thought. So here's that price action on the 9th of February of this year. Notice that, look at these indicators. They're calculating this value. So notice how it closed just above this yellow line and narrowly avoided the bear market. So that's a classic hammer candlestick, like a doji hammer. And notice a big rally afterwards. Now I'm still cautioning my subscribers about GDX because I don't like the way this action. Notice that we closed below this red line. We're again closed below this red line, so a little concerned. And again, if the dollar rallies, then this will come under pressure. Here's GDXJ, which is even weaker. Notice how low we went. We went below this yellow line. So for me, this is just completely avoid, basically. So again, overall, I think gold is in a bull market, but because of the way the dollar is behaving, I think maybe we'll see a pullback in gold-related assets. Okay, here's let's continue to hard commodities. Here's oil in the daily time frame. These are oil futures. This is an alert I sent to my subscribers recently, as early as 13th of this month, and this is a target already, so it's a pretty nice move. We traded it via USO, so here's that alert, and alert was given at $11.90 on the 13th of February, so now you have a pretty decent target already. So oil looks like it's I mean, it's definitely an uptrend. Could we possibly continue lower? Sure. It looks bullish, so I would probably still avoid shorting it. I would consider shorting oil if we close below this red line, which is currently at 51.28. That may or may not happen, obviously. And finally, I mean, before we're going to do natural gas futures. Here's natural gas futures. Looks like a bearish break here on the 1st of February. Continued lower, sold off. There's a fresh lows here. I think a bounce to at least $2.71, but ideally to 294. I mean, if we get to 294, I will personally short it. It looks really appetizing at that level. All right, let's continue to Bitcoin and cryptocurrencies of all sorts, and this is being traded as we speak. So this is daily Bitcoin versus dollar. It looks like it's, I mean, I want to short it here, honestly. but it's also possible that maybe we're experiencing yet another trend change. And I thought we went into a bear market here on the 4th of February, and I thought that now would be a good time to short it. So we'll see if I was correct. I mean, this worked out okay. This was already a trade, but this two most likely, well, we'll see where it goes, but the stop is actually way up here by the blue line at 13.11. So if we close above 13.116, I would say that we're in a bull market again for Bitcoin. But for now, I would treat this bounce as a opportunity to enter on the short side. Okay, here's Litecoin. Daily time frame, same thing. All cryptos are pretty similar. I think this is a bearish break. Here is that bearish break. I would probably start thinking about shorting it now as well. Put an arrow there. Next, we'll go over Ethereum. ETHUSD. So Ethereum looks better, and here's what I'm referring to now is that we actually closed above this blue line, which is in my book a bullish sign. So or rather, we may close above this blue line. If we do close above the blue line, that's a very good sign, and it could go significantly higher from here. Okay, let me see if I covered XRP. I think also Ripple. It's in a bear market basically. Okay, if you have any questions, please send them in. I am available at MasterChartsTrading.com. Sign up there. You'll get these indicators that I just used throughout this presentation basically. Quite useful, I thought, for myself, and for my trading. Subscribers are also reporting really good results. It's easy to trade. It makes lots of sense, and it's very intuitive interface. All right, thanks for watching, and have another great trading week. Bye bye.